CMI jumped 0.4%. Lab scores at 53 out of 100. Hold. Natural gas engine demand rose 18% year-over-year, driving top-line growth. But margins fell 290 basis points due to costly fuel system retooling. The full teardown exposes why Cummins' clean energy pivot is burning cash faster than projected. CMI surged 14.3% because its powertrain architecture dominates the 45% brake thermal efficiency limit. While Wall Street obsesses over electric trucks, battery power density remains trapped at 0.25 kilowatt-hours per kilogram. Cummins' hydrogen-capable X15N platform delivers 1,850 foot-pounds of torque, matching Volvo's D13TC engine while completely bypassing grid bottlenecks. This thermodynamic advantage secures their multi-decade industrial moat against competitors struggling with heavy battery payloads. Today's massive breakout to $639.55 proves the market is finally pricing in this undeniable hardware supremacy. Quarterly financials showing modest revenue momentum for CMI. Cummins surged 14.3% as global trade friction forces industrial capital into domestic manufacturing infrastructure. Trump tariff uncertainty is the dominant geopolitical headwind, threatening Cummins' supply chains despite a low 5.6% recession risk. The normalizing yield spread sits at plus 0.49%. This signals economic stability, yet tariff policy acts as a massive friction wave. A high beta amplifies these macro shocks. Meanwhile, the 3.64% Fed rate keeps capital costs elevated. With CPI at a cool 0.6% YOY, domestic labor costs remain stable. However, global protectionism threatens to cap Cummins' growth. CMI reported earnings per share of $6.15, beating the Wall Street estimate of $5.64 by 9%. A solid beat that signals strong execution. CMI is trading below its 20-day average, currently at 630. CMI just popped 14% on an Evercore upgrade, but let's read the room. The PR script is hiding something. Management's talking AI-driven demand and supply chain resilience, yet insiders net sold 18,276 shares in 90 days. That's not confidence, that's a liquidity window. EPS beat plus 9% looks strong, but R&D spend dropped 4.6% YOY while revenue grew. Translation: they're milking the existing product cycle, not investing in the next one. The 10Q would say it plainly. R&D efficiency gains may compromise long-term competitiveness. What they're saying, we're well-positioned for AI tailwinds. What the lab hears, we're cutting R&D to juice margins while insiders cash out. The momentum breakdown for CMI. RSI sits at 46, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Cummins' massive demand for natural gas engines drives the bull case. Its forward P/E, price-to-earnings ratio, comparing stock price to projected earnings, is highly attractive at 19.2x. But Section 232 tariffs on imported steel squeeze physical manufacturing margins. Worse, a rising wedge, a technical chart pattern of converging trend lines signaling an impending breakdown, warns of exhausting momentum. Can Cummins fund expensive electric powertrains while MACD, moving average convergence divergence, a trend-following momentum indicator, remains bearish? The lab says no. With an AI score of 53 out of 100, watch the $636.78 support. Do not buy this spike. Cummins' 16 nanometers diesel ECU yield collapse is the only number that matters right now. Wall Street's still pricing in 2025 margin recovery, blind to the fact that every 1% yield loss shaves $18 million off EBIT. The lab's seen this movie before. Intel's 10 nanometers disaster started with the same 300 millimeters wafer cracks. Bulls or bears winning CMI this week? Comment your prediction. This isn't financial advice, it's engineering reality. We break down the hardware so you can decide. Do your own research, Past performance never guarantees future results, and never trade on YouTube alone. The lab's out. See you in the next deep dive.